Smart traders are increasingly shifting to short-term trading strategies in forex and binary options because modern markets move faster, react instantly to news, and punish long holding periods. Short-term trading focuses on capturing small price movements within minutes or hours, which fits today's high volatility environment driven by economic data, interest rate decisions, and global events. In forex trading, price often reacts sharply during active sessions like London and New York, creating clean opportunities for traders who understand timing and structure. Instead of relying on complex indicators, most short-term traders prefer price action, using candlesticks, support and resistance levels, and trend lines to read buyer and seller behavior in real time. For example, when price rejects a key resistance level during the London session with a strong bearish candle, it often signals short-term selling pressure without the need for extra tools. Indicators like RSI, moving averages, and stochastic are still used, but only for confirmation, not decision-making. RSI helps confirm momentum during pullbacks. Moving averages act as simple trend filters, and stochastic warns when price becomes overextended after strong moves. Session timing itself has become a critical tool, as low-volume periods often lead to false signals, while high-volume sessions provide follow-through. Many traders also rely on economic calendars to avoid high-risk periods or to trade post-news volatility once price structure becomes clear. Tools like session markers, market hour indicators, and volume profile further help traders align entries with real market activity rather than guesses. This shift also reflects changes in trader psychology, as short-term trading reduces emotional stress by avoiding overnight exposure and unexpected gaps. Risk is clearly defined with small position sizes and tight stops, making losses manageable and consistent learning possible. For binary trading for beginners, short-term setups are especially appealing because trades have fixed risk, clear expiry times, and faster feedback, which helps beginners understand what works and what doesn't without waiting days for outcomes. Long-term trading has become harder due to unpredictable macro events, holding costs, and lifestyle constraints, while short-term trading fits better into busy schedules and offers more control. Overall, short-term trading is not easier, but it is more practical for current market conditions, where speed, discipline, and clarity matter more than long-term predictions.